Hi, I'm here today with Tim Kay, Academy Bank's Senior Vice President of Residential Lending, and we're going to talk about all things, or at least some things, mortgage and home buying. So, Tim, thank you for taking the time to chat with me today.
Thanks, Jessica. I'm really excited about it.
Awesome. So, I'd love maybe if you could just introduce yourself to everybody, a little bit about your background in the home loan industry. That would be great.
Sure. Yep. My name's Tim Kay. I am Senior Vice President at Academy Bank. I lead the sales team for Academy Bank nationally. I have been with Academy Bank for several years. I think I've been in the mortgage business since either 95 or 1996, quite a while. And I've had all the jobs from somebody's assistant to loan processor to loan closer to low-level underwriter to loan officer, and here I am today. Um,
Awesome. So, you can talk about everything from the very minute details all the way through to the high level things that people need to do to get ready to buy a home. So you are the
I think
perfect
so.
subject matter expert today. So this is
Yep,
great. If it's okay, I think we'll get right into it. For
sure.
those who are absolute newbies, can you explain what a mortgage is?
Well, a mortgage is what it is and what it is thought of are slightly two different things. What it actually is it's a document that gets filed usually at the courthouse as public record that says you own the house, and you usually anyway you own the land underneath the house, and you have what's called homestead rights, and it gives you sort of the rules of what happens if you live there, what you have to do to keep living there, and also what happens if you don't make your payments. That's technically what it is. What it really is in more layman's terms is it's a mortgage loan, is a specific kind of a loan that you normally get from a bank or a mortgage company that is used for the purchase of a house that you would live in, a residential property.
Perfect. So, and then you just pay on that over time until
Yeah.
you own the house outright.
Yes,
Awesome.
traditionally, most mortgages are one of a few things, but most of them are 30 years. And so a 30-year fixed mortgage means the mortgage interest rate is fixed for the full 30 years, which is 360 months. And then after that, it's paid off. And so there's no movement. There's also different kinds of fixed rate loans. Usually they're on the 5-year increments. So 20, 15, 10-year loans. There's also what would be called an ARM, which means adjustable rate mortgage, which is usually a 30-year long term, but maybe the rate's only fixed for 5 or 7 years instead of being fixed for the full 30 years. But most mortgages that are done today, about 90%, I think, are 30-year fixed loans.
Perfect. So when you say the rate, talk about
Yes.
the rate and how that impacts the mortgage payment.
Well, the interest rate, so whenever you buy a house and get a mortgage loan to buy that house, then you normally do two parts. So you do your down payment part, and then whatever you don't do for down payment is taken up by the mortgage loan or the mortgage. The interest rate is what is used to figure the payment. So you have to pay back your principal balance plus whatever interest is accrued over the life of the loan always. And that's just added up, divided by 360 months, and then you pay it monthly. So it's sort of a math thing. The higher the interest rate, then the higher the payment, because the higher the amount of interest that you have to pay back in 30 years. The lower the interest rate, then the lower the payment, because the lower you need to pay back. So interest is very important.